Good evening, everyone. I hope you all had an amazing New Year celebration with your family, and I hope you have jotted down your goals for next year and were happy with 2023 as well. So let's get into this year well prepared, well aligned with some nice technical charts, and let's try to make as much money as possible this year too. I had a few questions. I'll try to answer it today, but you know like it 2020, 2023, these years are pretty rare. I would say they would probably come once every 10 years. Like it's pretty rare that you get years like 2020 and 2023 back to back like that in a span of 5 years. But it is what it is. We got what it we got the majority of the move that it did. So 2024, what I kind of expect is an uptrend. Definitely, I'm not expecting a downtrend like 2022. There will be an uptrend. I feel. Obviously, we won't see 20% plus gains on most indices out there, but we probably will see about 10 to 15%, or probably 8 to 10% is what I'm thinking, to be conservative. But if you are going to look for like a perfect soft landing that might happen, we might end up with a 15% on S&P 500, which is quite a bit. But if you can time the market this year, I feel there will be a dip into March, April timeframe. If you can time the market around that, I do think we will. You can probably capture an easy 15% on the index itself. Apart from that, I'm also creating a list of stocks that I really like. I'm trying to this year. I will not change any kind of strategies per se. It will be the exact same strategies that we had. Like day trade, make some money, put that money into swing trades. If we see a very clear downtrend, right? Like for example, if we start to see huge call buying and then you see a bullish divergence in the on RSI or something like that, based off price, we'll try to pick up swings for 2 to 3 months out. We'll try to see what to do with that. And the other part that I will try to focus more is trying to do some trade recaps. The other question that I keep getting asked quite a bit is, am I doing the 1K to 10K challenge? I definitely am doing the 1K to 10K challenge. It's still three trades that I took last year. I started in the first week of December, I believe, and after that, I took three trades. Most of them are swing trades that I'm planning on taking. If you go over the FAQ channel, I do have the rules that I'm following of. To trade it. It starts off with a double exclamation points in our the sniper alerts channel, and every position that I take will be half size of the account that I have. So right now I have a $2,000 account in my hand, so I'll be doing a $1,000 position every time. And once I do once I get to 2,500 or 3,000, it'll be a 1,500 position every time. It's just a risky way of compounding that I'm trying to do, which it is not a perfect strategy for risk management or for big accounts. It's just a fun trading, a thesis that I knew a long time back kind of worked for a trader that I really respect. So that is why I'm trying it out for myself. If you don't have $1,000 to spare, just don't do it. It is absolutely not necessary. It is extremely risky. You can lose that account. There is very high probability for it. So I personally have never succeeded doing this strat of half porting the account every single trade. But that's why I'm kind of being very careful and net picking on what trades that I can take as well. So we'll see where it goes next few months. I think January kind of will give us a very good idea as to where this account will move to. So that's mostly about the 1K to 10K challenge. Finally, I do want to take a moment and talk about all the new members, anybody who is trying to use sniper trades as a tool for us as a supplement to their trading ability, definitely go over the welcome channel. There is a nice, neat, clean video which is like about 4 minutes or under, which gives you a nice structure of what the Discord is all about. So definitely go that. I will go that in more detail with a nice Zoom call later this month as well. Also definitely go through the FAQ. There are a few things that are going on in there where we have the 1K to 10K challenge. I laid out the rules, what are the setups, what am I trying to do here with the 1K to 10K challenge account. Some keep asking me, this is the most asked question for me recently. Who do I follow? Do I follow Fluid or do I follow you? I think it's based on how you want to structure yourself. Me and Fluid and Easy, all of us had a meeting recently, and we were kind of talking about how to split things up, where Fluid tries to talk about more swing trading. That is what she'll try to alert, and I will cut back towards day trading and partial swing trading, like how I kind of do, and my focus mostly will be on educating the folk, where okay, I just take like one or two trades mostly a day, so I can quickly recap my day, say, hey, this is what I did, this is why I did, and this is how much I intended to put in, and this is how my mindset was based off the risk that I'm trying to put in as well. So that is what I'll try to primarily focus on. But then Fluid will also try to move towards swing trading more, and trying to publish in setups based off swing trading. So technically what kind of happens with Fluid and me in the background is she looks at the flow, and then she comes back and says, hey, do you see this chart? What do you think about this chart? And then I'm quickly going over the chart, seeing drawing some quick levels, and saying, especially I go over so when she asks me something, I usually go over the daily and the weekly time frame, and then assess those levels and see, okay, you know what, this is what these traders are trying to look for. Maybe that's why you're seeing this flow. So we come up with a story to stitch the flow with the chart. So that's essentially what we kind of do in the background when she tries to alert something. So whatever she kind of alerts, it definitely goes through me. But then when it's weekly contracts or bi-weekly contracts, people tend to be more emotional, because the swinging in the PNL is pretty high. So we are trying to shift her towards 2 to 3 weeks out, and I'll be more focused on the shorter term time frame, where we do daily, weekly, and bi-weekly kind of option trades. So that is where we are trying to align ourselves. And then once things align, I don't want 100 people coming in and giving out 100 alerts and everybody trying to follow it. First, I have another analyst who I know pretty well, and he is also looking to get on board, but then we'll think about it later this year. But we want to align things and come up with a nice strategy, so that people are willing, or people understand what's happening. So that is what we are trying to focus on this year. So that's mostly about fluid and my alerts. So you can go that little details there. And then there are quite nice pickups here on the FAQ channel. Definitely go over that as well. So other than that, we have like the traders launch game plan, and then alerts channels you all are aware about. So these are some questions I keep getting asked quite a bit, so wanted to go over that initially. All right, so before we get into the call, first, just as usual, we will start off with our seasonality. Firstly, when we talk about seasonality, you see that the first trading day of January is looking quite bullish. You see 67, 57, and 67. It is quite bullish, and after that Wednesday comes, we have 62 on the Dow, 52 and 48 on Nasdaq and S&P. Usually when I'm looking at the seasonality, I'm looking at numbers which are greater than 60 and less than 40, so that like it gives me a better picture. So what is this seasonality report? Again, I keep repeating this every week, I feel, but then like I keep getting asked questions where, why is this day red when you said it will be green? Like this basically is statistics as to what happened in the stock market for the last this data is 20 years. So last 20 years, what happened on this day, on this particular day, on the first trading day of January, for example, that is Tuesday this week, right? What happened? So the first trading day, that is Tuesday, is usually green. The statistics show that it is usually green, right? So, but then if it's red, or let's say half the people on Twitter were talking about World War III starting, with UK, US, and Germany trying to strike down Yemen or something like that, and it being a bloody red Tuesday. But unfortunately or fortunately, none of that bad news came through. It was a breaking news headline, and it's like, dude, it's just the first day of the year and you're coming up with all this bad news. But anyway, the first trading day is usually very bullish. That's what this seasonality tells us. The second day is also bullish. You see Nasdaq being a little bit weaker than the Dow, so you can look for a little bit of rotation. And Thursday and Friday. So Wednesday technically is the end of the Santa rally. What Santa rally is the last 5 trading days of the previous year and the first 2 trading days of this year. That 7 trading days period is what is a Santa's rally, and essentially that's what it is. And after that, like the first 5 trading days, we were looking at some correlations regarding like how the market kind of works out. The first 5 trading days of the year, like for 2024, the first 5 trading days, that's 4 trading days this week and 1 trading day next week, that basically gives us an idea as to how 2024 is going to be, especially in election years. For the last 15 out of the 18 election years, if the first 5 trading days were green, let's say they were up, if S&P was up 1% or 2% or whatever that is, that year has exceptionally been good. If it was down for like let's say 0.5% or 1%, that year was exceptionally bad, and that correlation has stood true for the last 15 of the 18 election years. So this is an election year we are in, so keep an eye out for that stat. Like it's an important stat, right? Like if you know for the next 5 days we are going to see some kind of a correction, let's say, and we see a minus 2% move on S&P 500, that means you have to be a little bit more cautious in deploying money this year, right? So obviously the price will dictate how we kind of trade and invest. I'm not going to invest anything per se in the start of 2024, but like I'm just giving you some metrics, some data out there that has been pretty reliable, I would say, in the last 15 of the 18 election years. So keep an eye out for that on the seasonality front. Next one, on the macro front, we are looking at quite a bit actually. No, this is not right. Okay, there you go. Okay, so quite a bit actually. So we have the PMI which comes out tomorrow after market open. So I'm not quite interested about the PMI. I'm mostly interested about the Joel's job openings, which is on the third, day after tomorrow, which comes 30 minutes after the market opens. And after that, we have the FOMC. So these two will shape the market on Wednesday. Thursday, ADP employment change, which has been a pretty big mover for the market recently. I don't really rely on the ADP numbers. Like I just feel it's a random number generator. So ADP employment change, I think will move the market, but then like it's not. It's mostly going to reset back on Thursday. But Friday is the main one, which is NFP. NFP is going to be the big one here, and I think that will probably give us the direction for the market for the next couple of weeks, I feel. So FOMC, so two main events this week. I would say first is FOMC and the second is NFP. And under that would be Jolt's job openings, and then the ADP employment change. Under that would be the PMI and the ISM manufacturing PMI. In the order of how they can move the market. So technically, for the unemployment or the NFP, you would not want like a very strong NFP, but you do not want a weak NFP as well. It should be moderate, right? Like it should not look like it's a very strong economy and Fed can stay with their high interest rates for a prolonged period of time. It should neither be weak, because a weak NFP kind of gives you a sense of recessionary fears back in the market. So you want it to be a little moderate, like we are staying within expectation for the within Fed's expectations kind of thing. But then that is where you kind of balance between, okay, a soft landing versus like are we going after a recession per se. So that is what you're technically looking for. There is no bad is bad, bad is good, good is bad kind of market anymore. Like you have to understand the data as it comes out and say, okay, this is good data because it was not wild, it was not unexpected. You don't want the unexpected at this point. That is essentially what will help the market keep propelling higher this year. And if once we see something unexpected, like unemployment just absolutely rocketing, very very bad for the market. Unemployment cratering, bad for the market, because Fed can stay higher for longer kind of scenario, right? So that is where you want to figure out what is good, what is bad kind of thing here. So that's mostly about the macro front in the market right now. Looking at the earnings calendar next, nothing. Yeah, there's nothing that I would be interested in this. Let's see. There's WBA. Yeah, that's mostly WBA is the only one that kind of has earnings per se. Some kind of a flow per se, but otherwise nothing else really matters here on the earnings front. Most probably second week we'll start to see some move on the financials. So I'll have to do some research on that. So that's mostly about like the seasonality. Then we have the macroeconomic data, and then the earnings calendar here. Now let's quickly move into our core. First let's go over the indices. Let me go over the weekly, right? Like let's see what's happening on the weekly. I can go for a yearly as well. I want to show you this yearly calendar because, oh God, look at that, right? Like it is an absolute beauty, right? Like it's very similar to what we saw in 2014 to 2017. Like we saw a similar candles like these, and that's a beautiful candle. That's a bullish engulfing candle per se, with some nice volume as well. So yearly looks pretty solid. Let me quickly go on to the weekly time frame on SPY. Clean, clear uptrend, right? Like it is absolutely clean and clear uptrend with let's see, we are getting there. We are getting there to the all-time high levels. I do think once we touch that, we might need to flag a little bit, like a bull flag like that, right? It will be a very, very healthy pullback if we can get that pullback. So because at that point, what we would be trying to see or look for is, like we will be trying to look for higher highs and higher lows, which we have been seeing all of 2023, right? So now we have a higher high. Where will that higher low be? I really don't know where that higher low will be. It'll probably come at 450 or 440. I'm expecting somewhere around, yeah, this is the area where I would probably expect a pullback to, somewhere around the 440 445 a zone. But we'll see where we might get it. I'm really not going to speculate where we will see it, but I do think we will bull flag here and then kind of break out all the way to 520 to 530 on S&P 500 this year. I do think 500 is in the cards for SPY this year. I know many people might say, oh, 500 is too much, but like it is looking absolutely gorgeous here. I mean, I had people talk about all this rally going back all the way down, so I don't find those people anymore. When we had this downtrend, I did hear S&P going to 250, 300. It never went there at all. So when it was dropping here, the people were talking about 350s. Never happened. So you have to understand the trends in the market. It has shifted, like we are in an uptrend, and this uptrend can continue for a long time. Usually the downtrends in the market last for about a year to 3 years. Here in 2023 2022 we had that downtrend, clean nice downtrend here. But after that, once October, we saw that bottom, and after that it's been very clear uptrend, and uptrends usually tend to stay for about 5 to 8 years. So I don't know where S&P 500 will be in 8 years, but I could tell you we are definitely in an uptrend based off the weekly chart. So keep an eye out for that. Next one, looking at, I don't really do daily on SPY, but let's do the 65-minute on SPY. So bears got nothing, absolutely nothing, right? Yeah, we have two island bottoms, and all these bull gaps that are open. Please don't come out to me and say, oh, all these bull gaps need to be filled. They need not be filled. They can remain open. You can go back to December of 2020. You will see very similar bull gaps that are open since then, and I don't think they'll ever be filled. Obviously, never say never in the stock market, but I do seriously think that they will never be filled. But anyway, bears literally got nothing here, right? Like you for bears to have something in the market here, you need to have some kind of a bear gap that is open, and sustained for about a day or two. Be very careful in the market then. Be very cautious in picking out call swings in the market for at least 2 to 3 months out. Be cautious, because that bull flag that I talked about on the weekly time frame, I do think that will happen once we start seeing that bear gap that is open and sustaining for a couple of days. Because once the bear gap is open and sustained for a couple of days, I do think bears will gather some kind of a momentum to push the market back down. So right now, in the short term of sense, like in when we are looking at the 65-minute chart, we are not trying to guess the price action 2 to 3 months out or 2 to 3 years out. We are basically trying to guess the price action for that week, right? So any kind of a pullback in the weekly time frame right now, as we stand, this level, this megaphone pattern here, right? Like this will act as a strong support, right? You see how the number of times that we tested this before we broke out. We kind of retested it here. It's not a perfect retest per se, but we kind of retested it here. again created that bull gap here, and then we chucked back higher. So any kind of a retest, any kind of a pullback in this week towards this megaphone pattern, a rising wedge, I do think will act as support to propel the market back higher. So any kind of a pullback towards that megaphone rising wedge, be on a lookout to play some calls for a week out or so. I do think it will hold. I do think we will have to retest this upper trend line towards that all-time high, right? Like once we hit that all-time high, I think we'll get back down to probably, I do think somewhere around 440s, 444. That's where I do think there's that retest around this zone. But currently, if you're looking for level to level kind of a market here, once we see that and we pull back, there's quite a bit of support here at 460. You see why I'm talking about that particular level here. So there was quite a bit of basing that happened before we kind of broke out, right? 460 to 454, there's quite a bit of support there, and also we have a bull gap that needs to be filled. Every bull gap, remember this, every bull gap that gets filled will act as an intraday support. And and you want to be careful and say, okay, I will scale out. If I'm in puts, I will scale out once the bull gap gets filled. If I'm in calls, once the bear gap is filled, I will scale out, because bear gaps act as resistances, bull gaps act as supports. So keep that in mind. If you are thinking about a breakdown under 470, if this rising wedge does not hold, if we do see some kind of a candle close like that, like that under, so this will basically be a peekaboo to the downside. That's where you would want to look for 460 to 454 as your targets. I'm not talking about 444, 440 yet. So 460 to 454 to the downside, probably in about 2 to 3 weeks out. I would think that is a possible pullback. But you need a close below that trend line though, right? So but right now, as things stand, I do think if there is a pullback, this will hold. And I think our target here on SPY is basically 480, 481. That's where we have the all-time highs. And once we test that, once we break a little bit higher above that, people will start to FOMO in, jump in, thinking the market is going to fly. But then that's when we'll see the pullback. Market likes sucking in people. And once it sucks in people, these are very weak hands, right? Like the reason why we have that quick drops in the market is also because of these weak hands, where when it's moving, they want to carefully go in. Like they are very hesitant to go in. When the market is ripping here, from here all the way to here, they're very hesitant. They're very slowly putting money in. And once they see a little bit of a pullback, you see that, oh my God, I'm done. I'm like, they start liquidating every position that they have piled in through this rally, because they are so scared. First people to be taken out are these people here who tried to get through on the breakout, right? Like people here who got through on the breakout. Look at what happened here on these candles, right? Like I'll show it to you. So this is nice. This was the range that we were in, and people saw that we were breaking out. This is where some folks get in. And okay, we were going up and grinding. They were very happy. But then once we saw a pukish kind of candle here, look at how fast they were to get stopped out on those positions, and how fast they were there to get liquidated out, right? And then the market chucked back higher without them, right? So whenever you're thinking about the market, it's all a collective psychology. Like I do think the market will try to suck in as many people as possible, just going just above the all-time highs, and then it'll start its correction. That's essentially what the market usually does, because unless and until we did not see all-time highs right now, people are people are a little hesitant, saying, oh, you know what, the market might be overbought, I won't go in, I won't do this, I won't do that. Once it breaks all-time highs, they're like, oh, market is going to fly, and then they put their money in and they get stopped out very quickly once we drop below the previous all-time high. So I think that's what is going to happen in the market right now. So that is where my target is this week. I would say 480, and the levels you want to look for here is 474, 470, 478, and 480. These are your levels, top and bottom. So four levels you want to look for and see if the market can hold on to it or not. So that's mostly about SPY on the 65-minute time frame, and also talking about different levels on the weekly. Next one, let's talk about QQQ. These were the new levels that I had. 413, if you all remember, that's where we had top off on Thursday, and then Friday we had that little bit of year-end selling. This is very usual. This is what happens in the market every year, except in 2022, of course, where we had a clear downtrend. Right now, QQQ is bullish. I will probably draw some trend line here. Let's see if this is a valid trend line. I like. No, that's not a valid trend line. So there's no trend line here. But anyway, let's see what happens here, right? Like I'm overall I'm bullish QQQ because how Apple kind of looks, but I think 413 to 415 is where we kind of had that topping kind of a thing on QQQ. With some nice selling there on Friday. So keep an eye out for QQQ. I do think it is an index that might flag in 2024 or might not perform as good as 2023. So keep an eye out for that on QQQ. If you want to go long on QQQ, I think 393 is a good investable position. Level on QQQ here. If you want to invest into the index itself, 393, I see a possible retest of 393 on QQQ in the next 2 quarters. Let's see. 410, 407. If 407 breaks, 404 is a given on QQQ here. If 410, there is a little bit of resistance there. But if 410 breaks, we will see 413 again. 415 is where I would put a cap on QQQ and say I will be very, very careful going into the index itself here. So levels you want to look for this week: 410, 407, and 413. 407 breaks, you see 404. 413 breaks, you see 415. I don't see much on QQQ here. I will be trading SQQQ later this month. I'll put out the alert when I get it. I will try to see where I can do that. But overall, that's again, we have this earnings season starting, so there won't be as big of a pullback to 393 as I'm talking about. It'll probably take about a couple of months to get there. But I don't see much upside as well. Usually you see run-ups into the tech earnings. So 413, 415, that's where we might flag, and at most, probably the extended target for QQQ that I would, let me actually, I think I did my analysis on TOS, Thinkorswim, and then I never ported those levels this morning. Okay. 415 and 420. These are the extended target on QQQ right now would be around 420. That is like an extended target. 415 is being more on the lower end, being more realistic and thinking about a very modest kind of target here. I can't see anything greater than 420 on QQQ in the first half of this year at all. I probably might be wrong, but that's what I think about QQQ this year. So keep an eye out for those two. For 410, 407, and 413. These are your three levels to look for. 413 breaks, 415 target, extended target is 420. If 407 breaks, 404 is your target, but I don't see 404 this week. But 407 is probably possible this week though. So keep an eye out for that. Next one is IWM. This is my favorite one for 2024. Let me go to the weekly. I want to see the weekly before I can do something else here. Let's see. Yeah. So the weekly looks really good, right? Like we have been in that consolidation for all of 2022 and 2023. We are 2023. We almost broke down, but then we had that major rip closing out the year. This looks very similar to 21, right? Like you see this kind of 21, then we kind of ripped higher. Actually, no. Yeah, this is how it looks in 21, and then market just tanked. So that's essentially what happened. And this was 2020 where IWM was kind of lagging all the indices, and then 2021 it ripped higher. So end of 2020 and 2021 it ripped higher. So I think this is very common for IWM. If the market is in an uptrend, if the market is in a downtrend, it definitely broke down and based for quite a bit. But on an uptrend, if you see, let me get my pointer here. So when did that uptrend start? This was in November, and it went all the way till March, till Feb, right? So I think there's a little bit more left in the tank here for IWM. If we can break above 208. 208 is the first target here. If we can break above, I think 208 again, I'll probably tell you this too. 208 is a major level. Like you see this, the number of times we tested that level, right? Like we tested here, bounced, tested here, bounced, tested here, bounced, but then we broke down, retested that level and never recovered it, right? So 208 is a major level. So I do think 208 is going to be tested on IWM, but it won't break out is what I think. But if it does, we see 220, 220, 233, 230 plus, 220 and 230 plus is where we can see IWM going to. So 208, look for that level. I think that level is where we will see a minor pullback. I'm not saying we'll see a major pullback there. Let me go to the daily time frame here. I think 208, 209, that's where we'll see a minor pullback. There won't be a major pullback per se. I think we might see a pullback all the way to 193. So also by the dip still stays at 193 on IWM. That's where we also have the bull gap fill here, with this major bull gap fill here. But the short term target is what I think is 208 to 210 is where we can see IWM at. Once we see 210 break, 208, 210, that level kind of break, we will see a much higher return on IWM than on SPX or QQQ is what I think. So keep an eye out for that. Keep an eye out for that level. FOMC can do that. It has the power to do it. I do think once we start seeing rate cuts, IWM will be a leader in that in the indices as well. We probably will see some bigger moves there on IWM. So keep an eye out for that index. We will be trading it extensively even this year. One of the best trades last year for me, last quarter, last month, all of it for me is IWM. It was about $60,000 gain or something like that. So and after that the ball kept snowballing. So yeah, keep an eye out for IWM. Yes, it was a nasty close on Friday, but I year end selling, it's pretty common. I'm not going to read much into that price action, but then we should see what happens at around 208 to 210 on IWM here. So keep an eye out for that index there. All right, so let's quickly move into our core list of companies, starting with Apple here. Apple, I think it's a falling wedge that we are looking at here. 196 breaks, 200 comes. If 190 to 50 kind of breaks, we will see 190 and 187. I don't see Apple falling under 187 before the earnings. After earnings, probably it is possible. For me, when you're looking for a long-term investment kind of thing, look at the weekly time frame, and I do think we can get Apple at 180s or something like that if we do see a bigger pullback. But for a longer time frame, or for an investment purpose, I think 177, 175, that's where I would probably be more interested. I sold it at 172 in 2021 of December, so I would probably like it to be under that, but that's just the psychology talking there. But then 175, 176 is probably a good place to look for longs on Apple here. I'm talking about investing there. So next one is Adobe, one of the prime companies out there, which is monetizing AI already, looking pretty good. If we can, let's say, if we can break this wedge to the upside, we will probably see 618, 620 again. For me, Adobe, if it can dip down to around 560s, that is investable, is what I think. This was a nice consolidation breakout that it has done. Never has really, retested that breakout. So I want the retest of the breakout, and that's where I'll probably go long shares on Adobe. When it happens, I'll definitely let you know. But for right now, this compression looks pretty good. If cloud stocks as a whole are looking good, so if they start to break out, Adobe is definitely going to take back 600, probably move to 620 again. Again, I have to see the confirmation. I'm not seeing that yet. It's just consolidating on the chart. Once it does a peekaboo move up or down, based on how it kind of moves, I will probably pick up a swing trade on Adobe. One more thing, a disclaimer here, Adobe kind of trades thin. So if I'm getting into something and alerted it and the price has moved beyond 10% of my alerted price, just don't chase it. Wait for the price to come back. Especially stocks like Adobe, LRCX, I tend to take them as a swing because I can't really day trade them because you'll say, oh, you know what, you alerted it and it's up 15%. Did you get out? No, I won't get out, obviously, because when the volume is thin on certain stocks, I don't really trade as big per se. I trade smaller and I tend to swing it and things like that. So Adobe is one of those stocks, and I need to see the move there. Next one is AMD, 155, 151, 155, 160. There are quite a bit good bullish bets going on into AMD. 150 calls for next week. 150 calls for next week. Actually, 155 calls for next week on AMD were bought above 150, and the veil is still in. I checked the volume when they got in, and there was not much volume after that when AMD kind of pulled back. So we'll keep AMD on watch, definitely on a watch list here. If we do see a loss of 148 early in the day, like it's already lost, but then if we gap up and we see a loss of 148 early in the day, we'll probably play some we'll probably look for some 145 retest or 140 to come through on AMD with if the general chips itself kind of show weakness. So keep an eye out for 148 and 151. These are your two levels to look for on AMD. Next one is Amazon. Amazon, the day it breaks and breaches 154 and closes above, it's going to 160 that same week. So keep an eye out for that. So let's say Amazon breaks above 154 on Wednesday this week or Thursday this week, I'll probably pick up 155 on 157.50 call swings for next week, right? Like my target is 160 the same week. So 7 trading days from the day it kind of broke the level. So that's how I kind of calculate it on my in my brain. So 154, that's the only level that you want to look for. Any kind of a pullback towards 147 or 144, I'm going to sell cash secured puts. I'm also going to pick up some shares if it falls all the way to 140. So I am looking for to sell cash secured puts there, CSPs, and then I'm also looking for you know I would say a swing call position for March. So I'm probably looking for around 180s. Just I don't think it'll move that much, but then there's earnings that can cover it. So that's where I'm like, I can always sell weekly call options against that longer dated call, and then we'll try to figure out what to do with that. But 180 calls for March are something that I have in my radar for Amazon, so keep an eye out for that. Next one is AVGO. Broke down. I think there is a retest of 1100 here on AVGO. One of the weak chips here. If we do see a bounce back to 1123, 1125, I'll probably play some puts here on AVGO. Any chip weakness, AVGO will be my go-to here on it. Next one, Bitcoin breaking above 45,000. Next one is 46,500 and 49,000. Here, weekly chart looks absolute fire on Bitcoin. I still own Bitcoin from way back. I don't even remember when we we bought it. I mean, we didn't buy it. We won it. But anyway, the weekly chart looks absolute fire on Bitcoin. I don't know why it's not loading here, but okay, yeah, it's not loading on the weekly time frame. Okay, so anyway, Bitcoin weekly time frame chart looks really good, I would say. Basically because I can probably show that to you on the daily as well. So see the number of times we kind of tried to break above that 45,000 level, right? Like we tried to break above, every time we tried to break above, there was that very clear nasty pullbacks, and finally it looks like it's ready to break out above 45,000 and to move towards 50,000 quite quickly here after this nice clean consolidation on the chart. So my target on Bitcoin right now, I think it is around 49,000. It is looking very, very good. So that's mostly about Bitcoin. Next one, let's go over Google. Probably a retest around this trend line, upper trend line, and after that it kind of flies. My target for Google for 2024, it's still around 170. 121 is where we added Google. We added a lot of shares. So this earnings cycle, again, I will be selling some cash secured puts at around 125. You see this 125 level. So if we can get 125, I'll probably average up on the shares again. If we don't, it's totally fine. I'll just eat up the premiums and worry about things later on. But 125 cash secured puts is what I'm looking for. Look for cash secured puts. Look for Google it or YouTube it or do whatever you have to do. Just understand that if you don't have enough cash to buy the shares, that for the options that you have sold, don't sell them. Just don't worry about it at all. So cash secured puts on Google is what I'm looking for as well. Next one is Goldman Sachs. Goldman Sachs, nice consolidation, and after that we had a breakout. And I was watching this on Friday as well. I was hoping we can catch a breakout, but then obviously very low volumes, right? I think Goldman Sachs is getting ready to hit 400. And it is absolutely looking good. I mean, I think all-time highs can happen here on Goldman Sachs. After this consolidation, it's moving pretty quickly, moving pretty well. If IWM is strong, if Bitcoin is staying strong, I'll probably play some Goldman Sachs this week. This is a good looking chart. It's an inside day on Friday, breakout of the consolidation, which is very clear. I'll probably play some 390 calls or something like that on Goldman Sachs. I'll put out the trade idea after the call. Next one I want to talk about, let's talk LRCX as well. LRCX 800, that's where we saw resistance. We did not see a pullback to 775 yet. 775 must hold. If 775 does not hold, we go back all the way to 745. 800 can take it all. 800 break can take it all the way to 810. So that's mostly about LRCX. Next one is Meta. I'm bearish Meta this year. I'm not unlike last year where we added shares and all that. I'm not going to add shares on Meta, and I'm bearish on Meta. Meta, I think this quarter earnings, it will drop down to 325. That is where I'm expecting a pullback to. This is a nice clean rising wedge on Meta. We'll see. I have been wrong on Meta for about 2 quarters now, so I don't know. Like, look at that run. Like, that run. Like, I'm not saying I lost money on it. I mean, I did not make as much money as I could have made, is what I'm saying. I've been wrong on 2 quarters. Like all this consolidation, I thought there would be a drop, but nope. It's pretty strong. Very nice cash flow on it too. So it's been very strong. But my bias is not around this ran up, so you have to short it. That's not my bias at all. My bias is mostly around like this has had a great gain, so that's why I was swinging Meta as a put play for the last day. I saw that there would be year-end selling on Meta, and also Zuckerberg kind of selling it and all that. Like, I have seen the stock tumble about 20% after we see news around Zuckerberg selling his stock. So that hasn't happened on Meta yet. It actually went up after that news on Zuckerberg selling, and I've been trading this stock for quite some time, and I know every time Zuckerberg kind of sells, there is a 20% drop on the stock, and that I do feel that will come. I don't know when it will, so I won't be adding shares on Meta. What's a 20% drop on Meta? It goes to around like 300 to 90. So it can happen. I mean, 300 retest looks very healthy and very possible on Meta. I mean, we'll see where it kind of goes, but overall, I'm not going to long Meta here per se. So keep an eye out for that. Microsoft, very nice consolidation, trying to break out. If you kind of zoom into this, you see that there's a little bit of a peekaboo setup here, but then there's no volume. It was a story for the last 8 trading sessions. Little peekaboo here, and I've been seeing pretty crazy flow on Microsoft. I know there's 385 calls for mid-January. There's 400 calls for Feb, 400 calls for second week of January too. I think it's 112 expiry. I did see those, so they are all still in position. I don't know what they are looking for, or they are FOMO calls. I mean, who puts in 300, 400,000 into these FOMO calls, right? I will see what happens. If they sell off, I'll let you know. I'm not in position either. So we'll see what happens here on Microsoft. If cloud stocks are strong, Microsoft can be one of the plays there as well. Next one is Netflix, looking like a nice little falling wedge, just like how Apple kind of looks like. 493 break, it goes to 500, 505 on Netflix. Next one is Nvidia. I wouldn't call that a bear flag. I just drew the wedge as to how it kind of was cleanly aligning with that. I mean, this one on the weekly time frame looks very good, right? Like, if we can break above that 505, the level is 505. If it can break above 505, I do think the same week we'll see some crazy move, crazy FOMO on Nvidia towards 520 to 530. I do think Nvidia goes to 550. And if you are looking for a guidance for 2024 per se, I do think there is an upside of about 40% more on Nvidia. So call me crazy, but like that's what I think right now. And I'm not just throwing out numbers there. These are certain discussions that I had with a lot of folks. So that's mostly what I'm thinking about Nvidia there. So sorry about that. Last but not the least, let's talk about Tesla here. I'm running out of time. Sorry, it's been a pretty long call, actually, 1 hour. Actually close to 1 hour. So anyway, very very nice looking chart here. Again, let me look at the weekly time frame here. This was an analysis that we did uh, a long time back. Actually, I don't even remember. Okay, so that's the weekly trend line. We are looking at a weekly trend line here coming through. Once let's see. So this is a clear downtrend that we are seeing on Tesla, but then this is where we started to see some uptrend, but then like again a downtrend that's happening here. Yeah, 1 2 3 4, and this will be the fifth touch. If it can break out here, yeah. So let me tell you this: if Tesla breaks out tomorrow after the delivery numbers, I think it's going to 300 by Feb. It is absolutely going to rage once we see this trend line break. This trend line break, I will be picking up swings on Tesla. And again, I don't want to boast about this, or I'm telling this to you in a very humble way. I have had 100% success rate on Tesla swings since 2020. So I mean, when I'm talking about 2 to 3 months out kind of swings, based off weekly charts. So if there is a break of that trend line, I do think 300 is in the cards by Feb on Tesla. So keep an eye out for that level. We have numbers coming out tomorrow, pre-market. If they are good, if we see some kind of a nice reaction, and for based off the numbers, I do think Tesla can run. So keep an eye out for that trend line. This weekly chart, I think this is what you need if you want to swing trade. And I don't want to call this an inverted head and shoulders as well, right? Like I'm not going to call that an inverted head and shoulders. You can probably maybe no. I mean, this shoulder looks kind of weird. We probably might need something like that. So yeah, overall looking at the weekly chart, and then looking at the daily per se, looking at the daily here per se, yeah, 245 is a strong support. If bad reaction, we'll start. So if there's a bad reaction to the numbers, we will start the day under 245, right? Under 245 or 238. These are the two numbers that you want to look for tomorrow. If we have a good reaction to the numbers, we'll start above 261, 255, 261. So these are your numbers that you want to look for on Tesla. And when you're looking for, this is just the daily time frame, right? Like this is a shorter time frame period too, but this is a bigger one. And every single time I want to show get back to that analysis that we had. So every single time we touch that trend line there, we had a pretty nasty correction, 30%, 40%, 40%. And here also we had 26%. So we are coming back to that trend line. We had about 30%. So we are coming back to that trend line again. So yeah, I mean, if we can break it, it's going to be good. If not, there is a possibility of seeing 200 to 217 again. Yeah, 234 and 217. You have two levels that you can easily break through. Let's see. Let's see an average, right? Like see 30%, 40%, about 35%. The correction 35% is around 160 actually. Wow. So remember those bets that we were seeing on that I was talking about, the flow into Feb. If there's a market correction, we'll look for Tesla, etc., etc. You remember the strikes that they were going after? They were going after 160 and 180 strikes, and that's essentially the measured move of this stupid trend line that we have. So yeah, Tesla clear downtrend still on the weekly time frame. Uh, yeah, there's clear downtrend still on the weekly time frame. If bad reaction to the numbers, 160 is a possibility on Tesla. I know there's a lot of Tesla fans there, but I'm not. See, again, to Tesla, I sold it in 2021, missed some move, but then there's that fall from grace that Tesla did. I'm fine with that, but I'm still not looking for a long on Tesla. I'm still looking for Rivian per se. That's my growth stock for the next 5 years. But that's mostly about Tesla. So I hope that helped many folks. Last but not the least, some of you also asked me about the China market and how it's kind of going to look. It is definitely oversold, but this thing can remain oversold. Their economy is trash at the moment. They are seeing deflation in commodity prices, which is quite bad for their for most of their companies out there. Looking at Baba, looking at Baidu, looking at PDD, there's another one that PDD is another one that I really like. Like their Temu is definitely doing amazingly well. I don't have levels for PDD per se, but this is a nice clean bull flag that's going on here on PDD, right? Like I do feel there's like 170s that PDD might get to. Like see this, there's a nice clean consolidation that's happening here with an inside day on Friday, and I do think PDD is one of them that'll probably move higher, if probably move higher and also do very well compared to most of the other Chinese tech stocks. So PDD, I do think there's a possibility for 160. I'll do a much better and a cleaner analysis on this, but 160, I'm giving you that target because I did see some flows on leaps for September a while back. So I think that is the target that these flow traders are trying to go after. So keep an eye out for PDD. I really like this company here. Next one, Baba. Like you need to see some kind of a basing pattern. Weekly looks pretty good. Like you see that nice little falling wedge on the weekly as well. But we didn't break out yet. So don't say, oh, you know what, you called a falling wedge. Why are we not breaking out? We did not break out yet. You need 85 plus on Baba to probably break out. I think Baba is undervalued. That's just a very generic statement to say. But you need a break of 85 here on Baba. On the China market, you want to see inflation tick up. That has not been happening, and that is where I think there's going to be. It's going to be a little bit more. Downside pressure on most of these companies here. So Baidu overall kind of looks better than Baba, on the weekly time frame as well. But you want to see some kind of a basing pattern. I'm not seeing that yet. On the daily, it kind of looks like a U shape here, which is kind of bottoming signal kind of thing. But I want to see something very solid on the weekly before I can get in. It should look like let's say, I'll give you an example. I remember these because I kind of go over these setups quite a bit. Let's see. Yeah. So this one here, right? Like if you see how nicely it was basing, like you can go back and look for how SPY and QQQ were looking in 2020, in the end of 2022. But then, like, you see how clean and nice we saw all this basing pattern that was happening on Meta. So that's essentially what I'm looking for on Baba as well, Baba, Baidu, and JD as well. So unless and until I see that, I'm not going to really be very bullish. But at these present prices, I wouldn't ignore them per se. Like I would probably buy them. I did my tax year-end tax harvesting on Baba. I my average was around 93, 94, I guess. I quite don't remember yet, but like uh, I wouldn't be selling these. I mean, I wouldn't be very pessimistic about it either, saying Baba will go down to 50 or whatnot. I would just hold on to the position, I would say. I mean, if you are not doing your tax harvesting, I would just hold on to your position and say, okay, you know what? Let's see what happens this year. This year also, the year of the dragon. I have to pull up some seasonality metrics around the year of the dragon as well. It's a very interesting thing that China market actually does really well on during the year of the dragon. So I have to see how seasonality kind of aligns on these Chinese stocks as well. But my favorite right now on the China front is PDD. It's been doing really well. Has very good exposure to the American market as well. So keep an eye out for that on like if you are looking for something on the China market front. Anyway, I hope you all found this call informative. I hope I did cover most of what I wanted to. I'm making a list for you all to, like, look for certain stocks this year, probably for investing on the pullback. I will publish out that list. um, but otherwise, I hope you all are having an amazing holiday season. At least had an amazing holiday season and are ready to kick ass this year. Um, anyway, happy New Year, and let's keep growing, and let's keep hustling. Thanks a lot.